Good morning and welcome to the weekly roundup for the week ending Friday the 22nd of October, where as always we'll give you a quick roundup of the key stories throughout the various markets this week. Please don't forget to check out the link below if you'd also like to check out our various free stock market reports as they are produced. So this week earnings season ramped up with some big names on both sides of the pond revealing third quarter numbers. In the US, big tech were particularly under the spotlight with Netflix, IBM and Tesla all reporting. The Nasdaq outperformed its major peers, jumping over 2% across the week. Meanwhile, the Dow rose a softer 0.8% across the week and the S&P 1.7%. So far, earnings season has got off to a good start. According to FactSet, 84% of the S&P companies that have released results so far have topped expectations. Supply chain concerns and rising costs are still key themes though. Here in Europe, the focus has been centred around inflation and fears that rising inflation could stall economic growth. Eurozone CPI inflation was confirmed at a 13-year high of 3.4%. Meanwhile, in the UK, inflation eased slightly to 3.1%. However, inflation is expected to continue rising towards 4% by the end of the year in the ongoing energy crisis, supply chain shortages and labour shortages. The Bank of England have suddenly turned quite hawkish and the prospect of an interest rate rise has risen sharply to around 70% for a December hike. The FTSE is set to end the week 0.8% lower and the DAX 0.7% lower. In the exchange markets this week, the US dollar has come under some pressure this week. Concerns that the Fed could be outpaced by other major central banks tightening monetary policy has weighed on demand for the greenback. And this was shown with the pound, which gained a further 0.3% versus the dollar, its third straight week of gains. The pound-dollar pair hit a 6-week high on the back of rising bets that the Bank of England could hike those interest rates as soon as December. The euro also managed to gain 0.2% against the dollar. However, with ECB policymakers still insisting that the rise in inflation is transitory and sticking to a comparatively dovish tone, the euro could struggle. In the commodities markets, after 8 weeks of gains, oil is set to end the week very marginally lower, just 0.5% down. Whilst the ongoing energy crisis supported oil prices at the start of the week, forecasts of a mild winter in the US sent coal, gas and oil prices sharply lower. Reports that China was also considering bringing the price of coal lower added to the negative sentiment in the energy markets. Gold is set to book mild gains of 0.8%, adding to gains of 0.6% in the previous week. The weaker US dollar underpinned the precious metal in addition to high inflation, although elevated treasury yields are keeping any gains in check. On the stock markets this week, in the UK, after 5 weeks of gains, Barclays is set to end the week very marginally lower. Now, Barclays was the first of the UK big banks to report earnings and didn't disappoint. Thanks to a global boom in M&A activity and deal making, Barclays reported third quarter net income of £1.45 billion, and that was up from £611 million last year. Investment banking brought in almost £1 billion in fees. Over in the US, Tesla surged 5.6% this week, marking its 9th straight week of gains, whilst refreshing its all-time high at $900 a share. The electric car maker reported record sales and profits after delivering a record 241,300 vehicles across the quarter, shrugging off supply chain disruptions. So there you have it. I'll be back first thing Monday morning as usual with a look ahead to what's happening day by day next week. So make sure you subscribe not to miss that the moment it's released. Also, don't forget our very useful app if you're an investor. And of course, do drop us a comment below if there's any questions that you may have. From all of us here at Atlantic Capital Markets, have yourself a great weekend.